Hello traders and welcome to another video review. Today is Friday, January 21st of the 2022, last day of the trading week, but we can still take a look at the economic calendar. Overnight, we got some interesting data published from Japan. The national CPI increased from 0.6% to 0.8%, beating the expectations of 0.7%. But the national CPI, excluding the fresh food, is at the same level of 0.5%. During the London session, we got the data from the UK again. Retail sales has disappointed the market participants with the actual reading of minus 3.7%, while the forecast was minus 0.6%, and the last reading was 1% in the month of the December. So that was the Christmas period, and it was only the 1%. So that's not good. On a yearly basis, the retail sales are down 0.9%. Market participants expected 3.4% overall figure. So that's a kind of a bad sort of data from the United Kingdom. During the New York session, we have some data from Canada in form of the retail sales as well. Market participants expect a drop from 1.6% to 1.2%, and then we got the new housing price index. Market participants expect new houses to increase the value 1%. Both of this data are scheduled for release at 2:30. No interesting data from the US today. At 4 o'clock we got consumer confidence data from the Eurozone, and at the end of the day we got two events from the US. Federal Reserve Chairperson Janet Yellen will give a speech at 5:30, and then at 7 p.m. but a huge US recount will be published for all of you crude oil traders. So in that situation, let's take a look at some yen pairs. US dollar to the Japanese yen daily time frame chart is showing us signs of weakness. The recent pin bar candle made just above 50% of the retracement of the last wave up around the level of 114.95 has been the first cause of a extended drop for the last 3 days, and today, as you can see, we are continuing the drop towards the level of 115.49, which is the low from this week. If this low is violated, let me just put it on the chart. This is the low. If this low is violated, and that's a very interesting low because there is a clear pin bar candle made here, that means the bears are taking the market more seriously, and the control of the market price might be switched from bulls to bears. As you can see, we've been trading up for plenty of a time recently, and right now this correction might be a little bit different than the last one. In terms of the percentage of the price range, in terms of the percentage, we got 2.57% correction. The last one will be around 2.47, so that's almost the same correction. So if we break below this level, 113.49, then of course we have the overbalance, which means that move here, this move down, is not the part of this wave up. It's a part of another down cycle. It's a beginning of a down cycle. Below 115.49, next technical support is around 112.73 and 112.41. The key technical support is still the zone between 111.71 and 112.25. So please keep an eye on the US dollar to Japanese yen for any failure here in bouncing back up to continue the uptrend. Momentum is not helping the bulls. Let's take a look then at the euro to the Japanese yen. The euro to the Japanese yen has reversed from the 61% of the Fibonacci retracement of the last swing down. It violated this level, 131.15. The high was made at 131.57, which is like 42 pips higher than the level of 61% Fibonacci retracement. Now we can just simply remove that level. We will not need it anymore, and as you can see, we've been trading down for most part of the week. Very interesting pattern is being made right now on the daily time frame chart of euro to Japanese yen. If we close like this, that would be some kind of a hammer pin bar candle, which is an indication of the possible reversal. What reversal? Reversal of this move here, this move to the downside. So maybe we'll have some bounce here. However, plenty of time to close the candle. Please keep an eye on the zone of the free technical supports, 128.27, 127.91, and the lows of a little bit even lower. We can drag it a little bit here, 127.37. So if this zone is violated, then the outlook for the euro to Japanese yen is negative. The momentum is already below the level of 50, which is always not something that most bulls would like to see. However, please notice the fact that we has reversed from the 61-ish Fibonacci retracement, which means the market might try to continue that move down. This one here, if we put our trend-based Fibonacci extension tool, we can see that measured from that level, the level of 100%, there you go, is located way below, is located at 125.54, which means eventually we might have this kind of a pattern on a euro to the Japanese yen. That would be wave A, that would be wave B, and we might see the wave C somewhere here. In that situation, let me just remove this. There you go. In that situation, the wave A would be equal to wave C, or wave C would be equal to wave A if measured from the top of the wave B at 125.54. Kind of an interesting Fibonacci projection level. So that's the euro to the Japanese yen. Let's take a look at the pound to Japanese yen. British pound to Japanese yen is reversing from the highs of 157.74, just below the key short-term technical resistance and swing high at the same time. Right now, how much we have retraced? Let me just take a look. I guess like 38% or more. There's a 38%. Yes, exactly 38% of the last wave up has been retraced. We have, of course, a new technical resistance levels around here. So we got a nice zone. This is of course a supply zone between 157.75, 158.19. So 154.43 is the 38% of the Fibonacci retracement. The market might bounce from here, but if we judge by the momentum, we are just breaking below the level of 50, which is the neutral level. Any extension to the downside means 50% and even 61% of the Fibonacci retracement will be hit. 153.38, 152.34. So please keep an eye on those retracement. If we are break even below, then of course the lows of the December, the 149 will be tested. So far, the overall trend in British pound to Japanese yen is is up, of course, but this recent price action here might be a cause for the double top. So please keep an eye on the current developments on the British pound to Japanese yen. Is still in an uptrend. As long as we trade above the the green rectangle, the uptrend might be, of course, continued. But please keep an eye on the Fibonacci retracement. First clue that the uptrend is exhausted and we need a deeper pullback. And last but not least, Bitcoin. The Bitcoin broke below the key short-term technical zone. This is the this is the demand zone, the green rectangle, and it's not good for bulls at all. This recent pattern here that you see, this might be pattern called head and shoulders. We have the left shoulder, head, and we have the right shoulder, potential right shoulder, which means that the measurement of the price range, if we will treat the level of 39,555 as the neckline, so this is the neckline, 43% lower, which means in that situation, if we say 43% lower, 43% lower is around the level of, let's say, $17,000. So way below the lows of the 2021, located at around the $30,000, below $20,000, and then we will enter, if that's the pattern, we will enter the levels seen last time in 2020, and maybe the highs of this zone around the level of 20,000. There you go, 19,000, $20,000. This one is 22,424. So, but that's nothing here. There is no technical support. The nearest technical support is, as you can see on the chart. So please keep an eye on the current development of the British, of the Bitcoin, of course. Let me just zoom in. Last important thing I would like to say about this situation here is that candle here is very bearish. Let me just zoom in even more. That candle here, this one candle, this candle is bearish. That means failure to bounce from the demand zone. There is no demand here. Very shallow bounce inside of the channel below key technical support. That those two are local technical supports. The key long-term technical supports is here when the blue arrow is. This is the key technical technical resistances. This is the technical support, of course. 39,540 broken, low made at 38,150. So that's the low, and the next target is 36,520. No indication of a bullish movement at all. Bulls are sleeping. They are not present on the Bitcoin chart. Bears are pushing the prices whenever they like. If there is no immediate response from the bulls, the situation of bears might be very uncomfortable, especially if left shoulder, head, right shoulder price pattern on a daily time frame chart on a Bitcoin with the top of the head on new all-time highs is the scenario that market is playing right now. If it is, then we might see first 28,000, 30,000 zone, and then, of course, as I said, even $17 target for the projection of the head and shoulders price projection on the Bitcoin. We will see how this will be played out. It's definitely not a good situation for bulls because that nice demand zone has been violated. We are waiting for the daily candle to close. So far, big red candle breaking this demand zone is not telling us a good news, especially if you are, of course, a bull on a Bitcoin. So please keep an eye on the price behavior during this weekend on a Bitcoin, because as we know, the market is a Bitcoin market, cryptocurrency market are open 24/7, and maybe something will change here, and that's just a kind of a shakeout, kind of a fake out for the weekends, and then there will be a very nice dramatic V-shaped or pin bar shaped reversal from that zone. If there isn't such a price action, we are dropping like a stone towards 30,000 like no tomorrow. So that's my opinion, that's my analysis. This is what I see on charts before the weekend. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.